Hello, everybody. Welcome to the technical analysis webinar. We'll be getting started at this time. Before we get going, just a quick systems check. If you would, type OK in the chat box if you're seeing my screen clearly and hearing me all right. All right, I've got enough responses. Thank you. It looks like we're up and running fine. If anyone runs into any issues as we go along, just let me know. So a lot going on fundamentally. There's some news between the U.S. and China, some other things going on we'll take a look at, and then we'll get into the technical analysis on the charts to try and take advantage of the headwinds that have been created with some of the fundamental news. The technicals have been going well. Even if you're just a straight pure technical trader, we can take a look at how well some of the basic strategies have been working today and still could work. Keep in mind as we go along, no investments, no trades are guaranteed to have a profit. There's certainly risk involved with each trade. So you want to manage your risk in a way that makes sense for you, either with stop losses or hedge positions, proper exposure amounts on your trades, that sort of thing. And if you need help with that, just ask. We go over quite a bit of that in the webinars as well, and you could also talk with your account managers. Now, as we go over things, keep in mind it's meant to be from an educational perspective, not to be taken as financial advisement. But the idea here is to add some tools to your tool belt, some information that will help you to improve upon or build trading strategies that hopefully will bring you long-term profits. Now, keep in mind, technical analysis can be looked at from a couple different perspectives. We tend to stick to what I refer to as manual methods of technical analysis, understanding where the price levels are on the chart, looking at the repetitive patterns, looking for potential reversal points or breakthrough points, and recognizing trends when they exist and ranging patterns when they exist as well. And we'll go through those ideas on the live charts as they apply and as they make sense. Other ways of doing technical analysis involve the use of indicators, which certainly in combination with your own manual methods, they can be very helpful. Relying upon indicators without understanding how they're reading the chart in the first place becomes a little bit of a blind trust situation where indicators are only as good as the programming that created them, and also the settings that you put into them. And you understand that many indicators work best when the markets are ranging, meaning going up a bit, and when it's overbought, according to the indicator, it drops down a bit. And then once it drops enough, the indicator says it's oversold, and the market goes back up some. So this is when it's ranging up and down, up and down, up and down. Most indicators do very well under those circumstances, and you wouldn't need to know how to read a chart or pay attention to fundamental news if you just followed the signals coming out of the indicator under those types of conditions. But the fact is, many times those conditions don't exist, and markets are not ranging, but trending, either up, 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 or down, 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 throughout days or multiple days even. And in those situations, many times the technical programming that these indicators are using for its technical analysis look back on the chart to determine when it tells you to buy or sell. Those can be thrown off by a market that once it goes up a ways doesn't come back down like expected because it just keeps going up. So you get half the signals from the indicators many times are wrong when the markets just keep going in one direction. When it's overbought and it's telling you sell, many times it doesn't drop. But when it dips back down in an uptrend, then the buy signals are very good. So, and vice versa if it's trending down. Herman, yeah, we'll take a look at crude oil and we'll look at the technicals on that for sure. Crude oil is very interesting. What's happening with it right now, that's one of the fundamental stories we'll take a quick look at, and then we'll look at the technicals. Okay, so any questions as we go along, please ask. Any input you want to give, please give. I will share if it's relevant to the conversation. So let's take a look first. Actually, I wanted to go to a couple stories. So as is typical with the way we go about things in my webinars. We take a look quickly at the fundamentals, even if it's not a fundamental analysis webinar. We can look here, U.S. futures lower amid trade war fears. That's an old phrase that's made its way back now. The U.S. is really not happy with China. In a nutshell, neither is the rest of the world. And so it's looking more and more like different countries and different governments are starting to believe that China held back on information that they could have shared a lot earlier, causing what's a bad problem to be a lot worse than it had to be, maybe. And Trump is even threatening, I don't know, increased tariffs, increased sanctions, something. He's not happy about the situation, and I know for sure the U.S. intelligence is onto some information that they're looking deeper into, and I'm sure other countries as well. This headline, that's what this is about. U.S. futures lower amid trade war fears. We can look further into that article. Futures slide as Trump threatens new tariffs on China. This is two different sources now telling us this. Says here, Trump threatened to slap new tariffs on China over the coronavirus crisis. So this is a direct threat, not just the trade negotiations that were going on before the coronavirus, but a new threat of tariffs, not over China's trade practices, but over how they handled the coronavirus situation. There's information about potentially flights were blocked within China because they knew of how contagious the virus was, but they didn't block flights leaving China, which leads you to ask why. Why would they be more concerned about it spreading within their own country and not concerned about it spreading out of their country? And so that's being looked into, and some threats are being made about further tariffs, and the futures have responded. And so we see S&P 500, Nasdaq in the red. We do this quick snapshot look right before trading. It's many times a smart thing to do. It doesn't take long. Look at the main headlines. Look at the big picture on the futures. U.S. market didn't open yet. And what do we see all morning? This was all day today, okay, through the morning into the afternoon. Futures have been red, and the volatility index way up, 10% even early this morning. Volatility index was up. That's also referred to as the fear index. What that means is fear is up, markets are dropping red. All day we've had that picture. So all day you could have been trading accordingly with your technical analysis in the direction that makes sense for that type of sentiment, for that type of environment. Okay, and we'll take a look at the major indices. What opportunities could you have already been trading on just with that quick snapshot this morning? Futures red, fear up. Boom, you jump on the charts, do your technical analysis on assets that are being driven by that type of fear and that type of sentiment, and the technical analysis becomes more effective, okay? And so it's affecting oil, it's affecting indices, it's affecting gold, all kinds of assets, okay? And so we take a look at some other headlines. Stocks face test as reopenings could fuel demand or more coronavirus. So even as there's positive news, and that helped spur the markets yesterday, a lot of green yesterday on the markets, and it was in response to countries around the world, including European nations, US, other places starting to open up economies, okay? And it was not just US markets, it was European markets, it was the Nikkei, all around. There was optimism yesterday. And so I know specifically in many US states, restaurants are opening, golf courses are opening, etc. And it's happening around the world. So positive momentum. Then also fear of, well, won't that cause more spreading of the virus and more fear and more problems? We don't know for sure, right? And so while there's reason for optimism, then there's also reason for fear. And we keep getting these big market swings, which create huge technical analysis opportunities on the chart. And really that's what we're looking at here. We're not cheering on fear. You know, nobody wants a bad virus to cause problems, but certainly you can take advantage of the movements with your technical analysis on assets like crude oil, etc. Okay, now let's take a look at specifically oil. Well, apparently, and this just came out over the last 24 hours, Trump, in brokering a deal with the OPEC nations and Russia and Mexico and the US for production cuts, apparently it just leaked out that, or was purposely released, the information that part of what's spurring this on and why there's even more optimism all of a sudden that there are going to be big production cuts and that they're coming right away is Trump says the report is that Trump threatened to withhold military support over there in some of the OPEC nations if production cuts don't come. And so what we've got going on then is optimism about the production cuts, and oil went up. Okay, now this $26 a barrel, they're talking about a different futures contract there, but on our platform certainly it broke above 20, right? 21, something like that. We'll take a look. And then they're saying even with that optimism, oil pulled back down. And why? Because still there's a global pandemic, there's oversupply of oil, and fears about recession because of all the shutdown that major economies went through over the past month or two. And so just like with the indices going up yesterday with optimism about economies opening and then pulling back down with fear about more spread of the virus, same thing with oil. It went flying up with optimism about, for sure, there are production cuts now, and then back down some with fear about the situation that the world is still in economically with oversupply of oil, etc. Okay, which isn't going to go away anytime soon. All right, so in a nutshell, lots of mixed news, and in the short term, lots of fear today, lots of negative sentiment. So let's get on the charts. Let's take a look at what's happening and see what we can find in terms of opportunity. Crude oil still looking a bit bullish right now after some dropping, and this is largely because of production cuts, not because of economic improvement as of yet, but optimism about countries opening, like we talked about, and production cuts. Now, you see, prior to just 2 or 3 hours ago, through the day today, if we look at 1 hour candles, oil pulled down from 20.3 or so back down to 18. And now look at this support level. I mean, what an opportunity. You see, this was resistance. This is going back to the 23rd, 22nd, resistance, huge drop down. It comes back up. It became resistance again here, resistance, and then here's the breakthrough candle. Okay, not only could you have had a buy stop right above 18 waiting for the breakthrough, but also once it broke through, when it was pulling back down today, as people kind of cooled off from the positive production cut news, and the oil pulled back down with recession fears, where was the logical spot to take profit as oil was coming back down? Look at the old resistance level right here, resistance, that becomes support. Look over here, look where that drop stopped, exactly on that support level. So if you have any question about whether technical analysis works, whether it is just random chance or whether it actually means something, look at that reversal point. Look at this pullback. You see that wick came down, touched exactly here, and over the next 2.5 hours came flying up to here. Okay, it went up almost 250, 280, something like that, almost $3 climb after hitting this support level, and it only touched that support level once and up it went. Okay, look across. This support level is the old resistance level right here, almost exactly the same spot. This is what happens with support and resistance many times. Once the resistance is broken, it acts as new support, because whatever made it break the resistance, if that news still exists, production cuts in this case, then it should act as support to keep it from going back below that level. Okay, so yeah, Herman, it's retesting the resistance. So what can you put above this resistance level if it breaks through to a high enough standard for your liking? What kind of pending order buys if it breaks the resistance? You don't have to sit and wait for it to break the resistance. If it breaks through, you can have a buy stop pending order ready to go. Very simple to set up a buy stop, market execution, pending order, buy stop. Buy stop means it will buy from a higher price. You can program a higher price than it is now to buy. Make sure it's high enough that you're sure it's not a fake test. You know, sometimes you get that wick and then it comes right back down, right? So you could go for a buy stop. You also could sell off this resistance, right? In terms of selling off this resistance, keep in mind you're going against the most recent fundamental news. The fundamental news says good news for oil. They're cutting production by a large amount. So to trade down off the resistance is maybe a little harder to do than to trade up off this support down here. It was an easy decision to trade up off the support, right? Big news about production cuts today. Oh, and news coming out about how those production cuts were secured with quite a threat to pull military support in order to get it done. So we see it's respecting the resistance, but certainly could break through. A buy stop could activate that. If you feel the momentum's not enough, or even just the fact that it's a small risk, you can do a sell, could do a market sell, right? And your stop loss only has to be the same spot that your buy stop would activate. Small risk. Doesn't have to be up far because it's right on the resistance right now. So you could take a shot at a sell, maybe take profit if it goes halfway back down, or if you're more patient, if it approaches that support level again. I think it's not done testing the resistance personally, because the fundamental news, and that's why we take a look at the fundamental news first. The fundamental news is on the side of this support level. That was an easy move to buy off the support, would have worked very well. To me, it's a little harder to want to sell off the resistance right now, but it's an individual trader decision. A purely technical trader would say, I don't care. I'm selling off the resistance. I'll put my stop loss above. I'll risk a little bit to make more if it goes the right way. But it's an individual decision. But oil looks to be a big mover today with that type of news. Could easily be a breakthrough on this resistance around 20.3. Maybe an entry point on a buy stop somewhere above 20.5, 20.6. Okay, let's take a look at maybe the S&P 500. I thought that looked interesting. Earlier this week, we were doing a webinar where the S&P 500 had started ranging. Okay, it was up and down, kind of stuck in this pattern. And we looked and we said, we drew these lines here during this time period here when it was ranging. We said if it breaks through on the top side, you could buy. If it breaks through on the bottom side, sell. These are the lines from Monday that we drew. And so what happened? It broke through on the top side here, and away it went. Look how high it went. You could have gotten up to 2960-ish, and your entry point would have been on this breakthrough candle here around 2880. Okay, so an $80 per indice climb from Monday to earlier in the week. Okay, midweek. And so you might say, yeah, but after it broke through, it came back down here. And we talked about putting your stop loss below 2 support levels to widen the strike zone, to be more patient so you can stay with trades better, and you just take a smaller trade so that you can stay with the trade with a wider stop loss below 2 support levels in this example. And so I'll go through that idea. Had your buy stop bought with this breakthrough candle here, as it broke out of this ranging pattern, we drew the 2 lines where it was ranging on Monday. It broke through here, you get in, and then you see it tested back down. It broke back below this support level after breaking through. You see it broke back below, but it didn't break back through the second support level. And that's where many times if you put your stop loss after the breakthrough candle, you get in on the buy stop, your stop loss is down below 1, 2 support levels. That way you many times can eliminate that false reversal that then continues on in the direction you thought it would. Okay, so if there's any questions about that, let me know. But stop loss many times. Once you get the breakthrough and you're in, put the stop loss below 1, 2 support levels in this example, and you see how well that would have worked. Okay, this support was not that strong. Okay, this one here from earlier in the week. Why do I say that? Because it had just broken above the resistance and it was only there ranging for less than a day. Okay, so it didn't have a lot of points of contact or time back that it existed. So that's why in the strategy we said it's likely going to break through. Okay, we had a feeling that it would break through, and so we planned a buy stop and a sell stop and said whichever happens you can get in on. And sure enough, the buy stop triggered. It didn't drop below the second support level and up it went. Okay. All right, so let's take a look at the current movement then. Okay, the current movement then shows me it dropped just below this old support level, but not by much. You see how it tried to respect it? This was the second line from Monday. And if I just inch that down a hair, there it is, right? There it is. Wick, support, support, support. So it broke this first support level. It tested the second one, and here it is hanging out right above it. So the question is, what happens now? And so what we're looking at in the headlines is there's fear. Okay, volatility is up quite a bit today, and the futures are down. They're red. So there's the possibility that this could break through this little support level here. What kind of pending order can you put down here in case it breaks through? Sell stop, right? So sell stop pending order to activate if it breaks below these wicks. Okay, maybe at that line where I drew. Sell stop activates. Take profit. Obviously, it's your choice, but you can look at the first or second support level. Here's the first one. Okay, old resistance, 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 breakthrough becomes support. So if you get in on a sell stop at 28.26, for the first support level is at 28.08, about $20 down per indice. Okay, 10 indice position, you make $200 in this little movement, right? You have to take the trade size that makes sense for your balance, obviously. And if you're more patient, the next support level is down a bit more, right about here. Okay, support and up, which would be quite a bigger profit. And so with this, I'm not selling in the strategies that I would employ unless it breaks this support level. Okay, there's been a lot of dropping today. We see markets have a gap down here, and then further dropping, and finding support. Now, as the US market opens, if it breaks this support and drops, okay, then you're in on your sell stop. There might be momentum down as the US market opens. Could break that support and go running. It's also possible we could get a bounce. So if it bounces enough to break through this old support level, which is now resistance, you could have a buy stop ready to go up here. Okay, just playing which way is the momentum going to carry it. I believe more that it's going to, when the US market opens, it'll bounce around a bit, and I think it'll probably break this support and maybe drop a bit further. But there's no guarantee, right? That's why we can back it up with a buy stop, because there is some positive momentum about different states opening their economies. There's a lot of positive talk about that. There was positive movement yesterday with that. But we know the fear factor's up, and if this support level breaks, you could be in with a nice drop. Okay? I think short term there could be dropping. Longer term, markets are maybe bound to have some level of recovery still as the economies start opening up. I think it's inevitable. Obviously, no guarantee, but that has been the historical movement. You know, after the SARS pandemic, after the housing crisis, etc., the markets have always come back up. Okay, in the longer term. Yeah, let's take a look at Nasdaq. Good suggestion. Okay, Nasdaq also, we can see bearish pressure today. And by the way, you could have been trading on this all day. You know, this is a technical analysis webinar, so let's look. What happened here today? Resistance, right? Resistance level. This is a little bit of a gap here. So this is a resistance level. Sell from the resistance. How would you know to sell from the resistance? Even going back to earlier in the day, this morning, the headlines were showing it. The volatility fear index was way up even this morning. So here's your first opportunity for a profit right there. Easy sell off of this old gap down, this resistance level. Easy sell right here, okay? Where's the next spot? It formed support right here, okay? Support, breakthrough. Here's your second spot to sell. It broke the support, sell stop, wins again. So far today, there were two really good opportunities for sell stops. First, all you had to do was check what's the fundamental situation. Volatility index was like 10% up, not as much as it is now, but it was still up. Fear was up on the volatility index even this morning. That tells you sell off the resistance. One winner, breakthrough, two winners. And now what do you do next? Here's the next support level, right here, okay? You see it started to trend up, didn't it? Let me get rid of some of these lines that I put on here. Just deleting them all off. A lot of lines on one chart. I'll show the volatility index again, Levi, sure. Okay, so let's finish up with the Nasdaq, and then we'll go back to the volatility index. So you see the low points here. We're getting lower, 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 right? Lower, lower, lower. Look what happened right here. You see, the downtrend has taken a pause. The downtrend has taken a pause. So before I would get in, and I believe when the U.S. market opens, there's going to be some large movements, and all that fear that the futures are showing and the volatility index is showing, when the U.S. market opens, many times that fear creates a large push as the volume of trading increases when the U.S. market opens. So you may see a pullback further up, right? What kind of pending order could you put if this comes back up to this resistance level here? If the movement comes up to this resistance level, right? We know there's fear on the market today. It's uptrending right now. So technically speaking, you usually don't want to trade down in an uptrend, okay? So U.S. market opens at 9:30 a.m. New York time. Okay, 9:30 a.m. New York time. Now that's UK time 2:30 p.m. UK time. UK is on +1 right now GMT, so 2:30. Okay, so this is uptrending now. So even though there's fear on the market, now's not the technical entry point to sell, right? And in terms of buying, well, it's an uptrend. Why not buy? Well, because then you're fighting the fear, the fundamental news. So right now, if you're trying to match your technical analysis with the fundamental news, this is time to pause, right? And maybe put your pending orders in case it comes up to this resistance level That's a nice entry point if you believe it'll drop to sell from this resistance level. And then your stop loss could be above this resistance as well, up here somewhere above the gap, above this drop gap, this resistance, entry point here if it comes back up, and 2 resistance levels would have to be broken, 1 and 2, before it hits your stop loss up here. So that's not much to have to risk. Take a small trade size if you don't want to risk a certain amount. If you have if typically you'd put your stop loss closer, if by going above 1 and 2 resistance levels with your stop loss, that makes you risk more than you'd want to, then just take a smaller trade. You can have your stop loss through 2 resistance levels and still risk the amount you'd want. And certainly if you want to buy, you can buy, right? I'm not here to tell you which way to trade, but if the fundamental news is negative, which it is right now with a lot of fear in the markets, if it gives you an opportunistic spot on a resistance point like this one, you could take a shot at a sell with a sell limit programmed now at an entry point just below that resistance, stop loss above 1, 2 resistance levels to make it so it would take quite a momentum swing to cut your trade off, okay, for it to reverse completely. And then your take profit could be, if you're a scalper at this low point that it already reached today, many times once the momentum continues, it goes to the low spot that it already reached pretty easily, right? So that would, the first spot maybe to think about taking profit if you were selling from resistance up here is this line here. And if it breaks that line, well, it could just keep plunging, right? But you could do a partial close even. If you got in up here, partial close here, and then it can drop the rest of the way to wherever you see the next support level. Now, let's say it does not come up here. You could program a sell limit, but if it doesn't go back up and hit your spot, then you say, okay, well, I didn't get the opportunity to trade. It dropped before it went up to that resistance. Well, if that happens, you also can have a sell stop prepared right down here, okay? Sell stop entry point. If it breaks the support without retracing back up to the resistance level, that's okay. If it breaks the support, you have a sell stop ready to go right down here as well. So right now you can make it so for sure you trade on this, right? You can put a sell limit at a resistance level that you like with your stop loss above those resistance levels. In case it goes up, you can have your sell stop programmed also right now to sell if it breaks the support. And that way, either way, if it comes back up, you get a better entry point. If it breaks the support, you're in with the confirmation of the broken support. And then you just wait for the US market to open and watch the volatility. And one of them will be activated probably in short order, okay? And you don't have to risk much on either move to get back above the resistance levels. Now, if you think the opposite, if you think the fear is gone and it's going to swing, well, then just reverse everything I said. Put your buy stops above the resistance, right? You don't have to go just with the sell ideas. But right now, I'm giving examples that go with what the fundamental news is right now, which is high fear and volatility index and red on the futures. This looks to be like, could be a temporary pullback that once it reaches the right resistance level could have a strong drop again, okay? Again, remember, as we started the webinar, no one trade is guaranteed, right? And obviously, if you feel the opposite, you trade the opposite direction. Okay, so let's take a look then at this movement is similar to last week when we were looking at the ranging, and then it broke through and went flying up over the next couple days. Okay, it's stuck in a small range. It's going to break through one way or the other for sure. Question is, how far will it carry once it breaks through? But there's a huge potential for large movements here. All right, so let's go back. Volatility index, okay? Let's take a look. By the way, you can trade on it on our platform. This is what I was talking about, Levi. You asked me to go over the volatility index again. Everything's red except the volatility index. Why is the VIX, as they call it, why is it green when everything else is red? Because it's the fear index. It's the volatility index. Fear is up. Volatility is up 12% on this index. That's a huge number on that index, by the way. Under normal circumstances, without a global pandemic, you might see 2%, 3% on a volatile day with, like, NFP announcements, that sort of thing. It's been regularly above 10% on days like this, or below 10%, 15% negative while the markets are climbing as fear is dropping. So usually, good question, Tomas. Usually when fear goes up, when the VIX is green, gold goes up. When the VIX is red, when fear is dropping, gold goes down. But in the past month or two, there's been an inverse relationship much of the time. And we talked about this in past webinars. I'll go through it briefly now. People buy safe haven assets like gold when market conditions are bad, because they figure, okay, stocks might drop, equities might drop, so let me buy gold because it holds its value better. And so people are buying gold, driving the price up when there's bad economic numbers, bad factory numbers. And you have to ask yourself, though, why are people buying gold when they think other assets will drop? And it's because they want to have something of value down the road if there's a real crisis that they can then cash it in and get liquidity, right, Tomas? So they want to get liquidity out of it eventually when the actual crisis hits, right? If everything crashes. Well, guess what happened a month and a half ago? The crisis hit. Gold was up at 1,700, 1,800, and this pandemic hit, and the equities plunged. The equities completely were losing value, and people were afraid they can't keep their businesses open. People were afraid they can't pay their bills, and not just people, government entities, large corporate entities, they started cashing in gold. Gold investors were cashing it in to get cash in hand. They wanted liquidity at that point, because now was the payday for why they bought gold. Okay, so what we've been seeing since this pandemic is, with good news, people gold investors have been feeling like, okay, there's a bit of good news. I think it's safe enough to take my liquidity and buy gold again, because they feel gold will go up because there's going to be recessions maybe in different countries because of the pandemic, but they feel it's stabilized enough that they can invest back into something that's not liquid. They can invest back into gold and take the cash out of their hands. And then when there's bad news, the opposite. People, again, investors are saying, wow, it looks really bad again with this virus, and they sell their gold to get cash back in hand, to have liquidity again. So it's actually been the inverse relationship of what we usually see. Usually we see with fear, gold goes up. With good news, gold goes down. And lately it's been the opposite. So I've found that trading on gold, if you're scalping, I'm talking about scalping, by the way, not long-term moves. If you're scalping, it's been better just to play the technicals, because gold has been moving large numbers in short periods of time. So if you're doing just technical analysis and not trying to match fundamental news with what direction you think gold should go, if you just do the technical analysis on gold and do like we're doing with breakthrough pending orders ready, reversal pending orders ready, if you're right even 50% of the time, you're going to have a big profit, because when gold goes, it's been going. So if you catch a breakthrough on a resistance or a support level with a pending stop order, you could have a big payday and you don't have to risk much to the other side. So from what I've seen, you can just play technicals with gold right now for scalping. Bigger picture, there's probably some recessions in different countries coming with really bad GDP numbers, et cetera, over the next quarter or two. And so bigger picture, many believe gold could climb. And so depends what type of trader you are. Are you scalping? Are you big picture person, et cetera? Okay, Super J, you're saying you don't understand why VIX is up. It's a fear index. Why is there fear today? Look at the headline right here. U.S. futures lower amid trade war fears. Trump's getting into it with China. He's not happy about them not sharing information about this coronavirus. that they waited so long to warn everybody how bad it was. And so because he's threatening new tariffs on China, the volatility index went way up and the futures went red. Okay. All right, so let's get back to the chart. Let's look at maybe another opportunity or two. I think we're going to have a breakthrough on this movement very shortly after the US market opens, if not before. So pending orders here, even if you think that it could break through on the upside, then put a buy stop up here above the resistance. Certainly, a sell limit off this resistance could pay well, and a sell stop below this support could pay well. But hey, I'm the first to say prepare for the unknown. Put a buy stop above this resistance up here as well if you want. Okay. Let's take a look then. Good question, Levi. You're asking, how does it affect currency pairs? What do you think is happening with pairs against the yen? Okay. This was yesterday. Euro went flying up against the yen. Why today? Why today is the yen pulling? This is today, by the way, here. Let's go to like 15-minute candles. Okay. Why is it dropping? Why is the euro as strong as it was, right, yesterday? Why is the euro coming down, 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 down against the yen? What is the yen considered as a currency? Kind of like gold. A safe haven, exactly, Sharon. Mubarak. To your question, Levi, when the volatility index is up, unlike with gold's weird relationship lately, where gold isn't kind of reacting with fear like it used to, the yen is. The yen still regularly, as you see the volatility index up, the yen has been strengthening. Let's look at USD JPY. Look what's happening. How easy was that to predict? And I promise you, I didn't look at the chart for USD JPY before the webinar. I just knew it would be dropping. Why is it dropping? Fear is up. As soon as you saw this morning that the volatility index was 9%, 10% up, all you had to do was draw your lines, support level, support, support, prepare your sell stop. If it breaks the support, you're in. Such an easy technical analysis strategy. Okay. Many times traders try to make things too complex, and you got 3 or 4 different indicators on the chart, and you have this checklist of 6 or 8 different things that you need to have happen before you place a trade. How about just look at the VIX index? Look at the futures. Futures are red. Volatility fear index was up a huge amount. Draw your lines for support. If it breaks the support, that's confirmation of what you just saw with the fundamental news. The yen, why would you pair the yen against the USD? Well, if the US might be having a new trade war with China, that hurts the value of the USD, right? And what do you want to pair it against? Something that should be strong. If there's high fear, the yen should be strong. So you always want to try and pair a weak horse against a strong horse, so you can pick the winner easier. In this case, it was easy to predict that the US would drop against the yen. Okay. And where would you take your profit? Well, here was the first major support level: resistance, 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 breakthrough candle. Breakthrough candles are typically, as you break the resistance, larger than the prior candles. This is a clear support level now. That's the breakthrough, so this becomes support. Look at this drop. Look where it stopped dropping. Right almost to a T on this support, and now it broke it. Okay, it broke the support. So this is continuing the downtrend now. It just now had a breakthrough candle. This candle broke this support level right here. So the next support level is down here. So this is an opportunity in the making right now. USD just broke this support level on the current 15-minute candle, broke this support, and it's dropping. Stop loss would be above this support. Take profit would make sense right down here at the next support level, just before it, down here. Okay? Very simple strategies. Okay, Charles, good question. Who's the biggest buyer of the biggest exports out of Australia? Australia is an export nation for GDP concerns. Iron ore and coal. Two biggest exports. Who's the biggest buyer? China. That's right. Sharon was the first. China. So, Charles, to your question, as China goes many times, so goes the Australian dollar. So if we put the AUD right now against the yen, you can imagine what's probably happening. Let's take a look. Let's find the Australian JPY. Okay, look, isn't it expected that it's dropping more sharply than the euro did and the USD did? It all makes sense. Euro only dropped slightly against the yen. Why? It had reasons to be bullish yesterday. And it's not in a trade war with China, right? The European Union. Why was the US dropping faster than the euro against the yen? Because US is involved with some issues with China. And then why is the Australian dropping even faster? Because the Australian is hugely dependent upon China. Okay, and so this makes sense. Very predictable. You could have drawn your support level here. Okay, support, breakthrough, sell stop would have been in, profit. Okay, that simple. And let me show you how many times you could have done that. Here was a support level. Later in the day, support, 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 another sell stop down here if you closed the first one, breakthrough, and it kept dropping. Here's the third opportunity. Support, support, support. That's when you closed the first trade or the second one. It consolidated and went sideways. You took your profit in case it went back up. You have another sell stop below that support level. It breaks through, profit again. And right now it's in the midst of dropping after breaking that last support level. Why are we not buying up off the support levels? Why are we not saying, hey, it's a support level, let's buy? Look, it didn't bounce all the way back up to the next resistance. Same here, it formed support. It did not bounce back up to the next resistance. Why not? The fundamental news tells us this is more likely to drop than to rise, that the yen should be strengthening and the Australian should be weakening, fundamentally speaking. And so now when you do your technical analysis, you knew I want sell stops below support levels. I don't want buy limit pending orders to buy off of the top of a support level. I want sell stops to sell when the support level broke, because you prefer one direction over another with your technical analysis based on the fundamental news. Type OK if you're with me on that, or questions if you have them. Okay, good. So what about more opportunities with the Australian, since we're looking at it? 1 hour candles, 4 hour candles. You know, it just broke this support up here. Where's the next support level? I see it down here on the 4 hour candles. You see here? Resistance, breakthrough, support. You see the support level here. So look how much further it has to go before it reaches the next major support level. We're talking, this could drop almost 50 pips more before it reaches the 4 hour support, 45 pips. Okay, Mohammed, a support level is a price level where the price hits and goes back up, and then hits again and goes back up, meaning something is supporting that price from dropping any lower. And you can draw a line from those low points and see that it keeps hitting that price and going back up. That's a support level. A resistance level is the opposite. When the price goes up to a certain level and drops, up to the same level and drops. Yeah, Winston, all of the webinars are recorded. So you can go through this webinar again. You can go through past webinars and you'll catch on. Trust me. It's very repetitive, a lot of these ideas and strategies. So for those of you asking about support and resistance, look here. The price went here and dropped. It went here and dropped. Look at the same spot. It hit again and dropped. 1, 2, 3 times. That's a resistance level. Resistance, resistance, resistance. This candle broke above it. That's the breakthrough candle. And look, it became support, support, support. Okay? Now it broke through. Here's the breakthrough candle. It broke through the old support, and now it becomes resistance. And look at the plunge after it broke the support. Okay. You can find the recordings on our YouTube channel. Okay, in the English webinar section of our YouTube channel. Just go to YouTube, keyword search AvaTrade channel, you'll find it. Okay. Okay, so this looks like an opportunity that has a lot more distance to drop before the next major support level. So that might be something you look at with the trade war heating back up between US and China. Okay, this has potential 45 more pips before that next support level. There's no guarantee it'll drop, right? But looks like a nice opportunity. All right, I think this is a good place to stop. We saw some good opportunities with oil, with the major indices. You might take a look at Apple and Amazon. They've had some big movements lately as well. You can apply the same strategy concepts to it, and also gold. Okay. All right, thanks everybody for joining. Bye for now. Have a good weekend.